Good afternoon. Welcome to today's LBMA webinar entitled The Gold Jewellery Industry and the Pandemic, Now and Future. As part of our virtual summit series, our speakers will be reviewing the impact of COVID-19 on the gold jewellery supply chain, how the industry will be affected in the future, and how it can deal with the growing pressure to support artisanal gold mining. If you have any questions during the webinar, please submit these via the questions drop down in the control panel on the right-hand side of your screen. If you are using your mobile device, this functionality can be found in the questions tab at the bottom of your screen. And if you are having difficulty submitting a question, please just email ask@lbma.org.uk. So without further ado, I will hand over to you, Philip.
Thank you, Taylor, and thank you to the LBMA for inviting me to host and moderate this webinar. As Taylor says, this webinar will be around 30 minutes and we will take questions if time allows at the end of the session, so please put them in the question box in your screen. Gold jewellery accounts for around 60% of global gold demand, and today we have a fabulous group of gold industry experts and influencers who can talk about the impact of the COVID pandemic on the gold jewellery supply chain. How it will be affected in the future and how it will deal with the growing pressure on artisanal mining. We have with us firstly Iris van der Weken, who's the Executive Director at the Responsible Jewellery Council, the Responsible Standards and Certification Membership Organisation for the jewellery industry. We have Mark Hanna, the Chief Marketing Officer of Richline Group, Berkshire Hathaway company, one of the largest manufacturers and distributors of gold jewellery in the USA, with a global supply chain. And we have Neil Harvey, who has been on many of these webinars before. He's the Chief Technical Officer at the LBMA and responsible for the good delivery system for gold refiners around the world. In April and May, we saw severe disruption in the gold supply chain and a devastating reduction in consumer demand across all markets. In this period of economic crisis, however, we've seen the gold price fulfilling its traditional role as a safe haven investment. So we've seen high increases in demand for gold-backed investment products such as exchange-traded funds and a gradual strengthening of the gold price. However, gold demand globally is dominated by gold jewellery at around 60%. And Metals Focus, one of the leading industry data organisations, has forecasted that 2020 will see the lowest levels in global gold jewellery demand for over 30 years. In the two largest markets around the world, India and China, we've seen that demand in India is recovering somewhat, although sales in Hong Kong are still very low for political reasons, as well as for the pandemic. But in India, the second largest market, demand is struggling as manufacturers and retailers are not operating at anything near capacity. In the third largest market in the world, in the USA, we've seen the largest retailers reporting sales down by around 40% in the last quarter. However, the USA is very dependent on the holiday season around November, December for most of its sales. But jewellery retail in general is amongst the worst affected of all consumer goods, as it's very much a non-essential and a discretionary category. So I wanted to ask our panelists how they see the impact of the COVID-19 pandemic on the gold jewellery industry. So as is the norm, we would take a question for ladies first. So I'd like to ask Iris. Iris, what do you see as the dynamics of the global jewellery industry now, and how do you foresee what the new normal will be like?
Well, first of all, thank you, Philippe, and I'd like to take the opportunity to thank the LBMA for inviting the Responsible Jewellery Council. I think the key question that all industries are asking, indeed, what is going to be the new normal? And you were already sharing some facts in the introduction. The jewelry industry is struggling. And if I look at the RJC with over 1,250 member companies, the first feedback that we receive from our members is that, there's a lot of uncertainty. Companies are looking at cash flow, trying to save their employees, their people. They need to pay their contractors, their suppliers. Often you will have suppliers, definitely a lot of vulnerability in the middle of the supply chain. And then, of course, there's the consumer. If we don't have a consumer, there's no market. And I think at the same time, we also saw for the industry really the call for action by the NGOs about the vulnerability, especially, for example, in artisanal scale mining, and the necessity for responsibility. So a lot is happening. And I think there are three messages that I would like to share with our audience today. First of all, the jewelry and watch industry, and I think it's a common denominator with also the other industries, cannot do this alone. So governments will have to step up. And for example, we see that there are temporary measures, but there is still sometimes not yet clear policy, let's say, ahead. So we need this global and local policies to see how can companies survive, and especially also in jewelry, because think about jewelry, it's about creativity, it's about entrepreneurs, it's about often a lot of family businesses. So how can governments support the businesses in the short run, but also in the long run? So a second element that I wanted to share is, the consumer. We knew that before COVID that we have this more conscious consumer, the millennial, the Gen Z, and the consumer that is really looking at purpose, looking at authenticity, looking at the product, how the product is made, what are the management systems, how are you treating your employees, how are you treating your suppliers, what are you doing positively as impact. So from do no harm to do good. So of course, the key question that everybody asks now is, we are in such extreme circumstances, how can we keep the momentum going and the movement going on sustainability? And I must say, we as Responsible Jewelry Council are very confident that responsibility is the only way forward to build a resilient business. And I think there the positive news, in every crisis, see it's an opportunity, is that you have that younger consumer that's quite critical. But of course, you need to have that income to be able to purchase. And I think the final comment, Philippe, that I have is that business as usual will not work anymore. We all, within the supply chain, must move beyond compliance to really build transformational partnerships, because no company is on an island. And I think when we look at the RJC, for example, which is really an enabler to integrate the different aspects of responsibility, from human rights to labor rights to environmental impact, into the operations of an organization, I think that's the only way forward. And we see that through regulations, and we have the EU minerals regulation, but we also have the European Commission that's working on 2021 regulation on human rights and due diligence. So this is only a trend that will continue to shape our industry. But I think at the end of the day, it's about, what as an organization can you do beyond compliance and in collaboration with others, because supply chains are connected, they're global, and they're multi-tier. And going back to your question, there is not going to be new normal. We see at RJC also, we have taken action on temporary measures, from the way we do audits as exceptional measures. We have specific guidance now during COVID. So I think every organization needs to adapt. And we're looking forward to doing that together with all the industry associations and organizations. Thank you.
Thank you, Iris. Yes, some very strong messages there about the new consumer. Mark, can you talk please about the impact of the pandemic on the US jewelry market and how you see consumer demand being affected?
Yeah, I'm going to give a little bit of perspective from some previous recessions, but the coronavirus recession, which we now call various things, the Great Lockdown, the Great Shutdown, is quickly compared to the last recession of 2008 to 2010. There are some major differences. That the major difference here is this is about livelihoods and lives, and this makes the pandemic recessions quite different than the past. It's, I think, why we hear so often the phrases next normal, new normal. And this has become progressively clearer to the consumers, to supply markets, that we're not going to go back to exactly the way we were before. So that in itself brings up management acumen to say, oh, how do we change? What do we need to change, and how do we make this happen? There's no question that we're in the midst of a beginning recession. And the next slide, please. Hold on one second. So what you see here is a couple over the last couple decades, the recessions that we've been in. The last one I referred to was called the Great Recession from 2008 to 2010. Really, this was a period of general decline observed globally through national economics throughout the world. And the scale and the timing of this was from beginning to end, it was about a 19-month, but that's still referred to as a V recession. And the V is really meant that it's a very quick and a very quick down, very quick recovery, deep decline and recovery. I think the big difference this time around is probably the V in the Corona recession needs to be vaccine. And we in the U.S., I'm sure everyone sees the numbers. We're continuing to accelerate rather than abate the numbers of cases and so forth. That the economy is quite different in a lockdown state, and with the world wearing masks, particularly to the jewelry part of this business. But if I cut the gold for a little bit, we've also going to be in the midst for this fall season of kind of a perfect storm of lower discretionary income and higher gold prices. This is really going to call for a little bit of a retail reset in terms of the pricing and the ability to not create sticker shock right when people are back wanting to buy. Really what I'd like to say is that there's right now we've got kind of all the worst. We've got a sharp rise in unemployment. We've got a 2020 stock market volatility. The tourism and hospitality industries have really totally collapsed in the States, and there's been some destabilization in the energy industry. Everyone knows what's been going on with oil, and of course a major downturn in consumer activity. And consumer activity really drives the United States, and so that GDP has taken a big hit, and we're in not the tough situation that we can't overcome, but we're in a tough situation that, as Iris mentioned, this calls for a real strong management process throughout this period of time. If I digress a little bit to the supply chain, there's sort of three factors here going on in the supply chain that the mains are health, economics, and political, but more in a more finite basis, that transit times and transportation are quite difficult throughout the world at this particular time. Absolutely, factory capabilities have been shortcutted, and speaking for our own facilities, we're beginning to get opened again a little bit in some of the locations worldwide, but having facilities in China and Thailand and India and Italy and other places throughout the world, places like Italy have been just absolutely crippled in terms of the supply chain part of this. So people are beginning to get back to work somewhat, but it's very limited. Social distancing is a must. The way we and many others in the supply chain are forced to work is certainly going to limit supplies. So the factory capacity location situation, in particular, will be sort of a new road for management to travel. With demand sort of stagnated at the moment, yet we believe it will come once there's end in sight here. But the factory's not being prepared for that and not being able to produce the forecasts and so forth. This could lead to more of a supply situation further down the line. Next slide, please. So this is kind of as I mentioned, we've got production issues, delivery issues, in gold specifically, many of the refineries worldwide, most refineries worldwide were completely shut down. So the point of processing gold at the very first fabrication step was already hurt by this particular situation. So it is something that is impacting all of us in this industry, how we manage it, how we forecast, our levels of pessimism or optimism in terms of our future purchasing and procurement are severely impacted, and we're all doing our best to forecast our own situations and move on to what we believe is going to happen on the other side of this. So next slide, please. To get some specifics about the U.S., this is unprecedented, that there are about, somewhere less than 500,000 total retail stores in the U.S. In a very short period of time, about a 1-week period in the beginning of March and April, over 10% of those stores closed. The jewelry shutdowns were substantial because of the up close and personal needs of the jeweler. This impact is going to continue from 2 points of view. Firstly, many of these stores that are closed are not going to ever reopen. And the percentage of that's yet to be seen, but it's hit some industries very severely. The people like staples of the middle American market like JCPenney have filed bankruptcy, and they will be closing entirely. So the combination of this and with very high visibility to the consumer in terms of the impact on stores, the unemployment, not just created by this, but the unemployment rates, which have skyrocketed in the United States. I think it's about 11% now, but it was high as 20 or 18% just a short time ago. It's an environment of economic fear, not to mention health. So the economy is not in a great place. It's in a rather bad place at the moment. And in addition, the factors that we have to look at as management is we've got to look at health. We've got to pay attention to our people in particular. Everyone does. Your first responsibility is to your people and their health and well-being. So that's an attention span much greater than it's ever been before for all of us. I mean, second, we've got the economic conditions we talked about. But thirdly, and not to be underestimated in the U.S., on top of everything else we've got going on, this is an election year. And an election year for presidential election has always created some level of stagnation during that period of time. So we're facing a pretty tough situation in the U.S. right now. The jewelry industry certainly comes along with that retail concern. Next slide, please. The optimism is up a little bit by the consumer. The consumer's attitude towards their own economics and its impact on the country was quite dire in the midst of April. That optimism has come back somewhat. There is hope that social distancing and things are working, although it appears we're in a second wave at the moment. So I come back to our chances of a V recession are most dependent on the word vaccine. One more slide, please. So really, in conclusion, and what I'd like to say is, yes, we've been through numerous recessions. Right? Some have been much worse than others. 2008, 2010 was quite severe for our industry. And yet, as an industry, this is 60 years of onward and upward. We've had 60 years of actually finding the proper way to recover from these situations. And the health crisis this time makes it different. The jewelry industry and the gold industries have been good about recovery. I think we will manage the recovery well once again. The health issue is somewhat out of our control, so hopefully that's going to be managed in a way that will alleviate some of the fears. And we look forward as management to what do you call it, the new normal or the next normal. It certainly is going to be normal, and we all and thousands of throughout the world are working on how you're managing this next generation of our industry.
Thank you, Mark.
Thank you very much.
Thank you, Mark. Neil, there's can I ask you, how has the pandemic impacted the refining industry specifically, and has there been adequate supply? Has it increased risk in the supply chain, do you think? And can you also talk about how it's affected developments on the conflict minerals legislation, particularly in the European Union?
Yeah, sure. Thanks, Philip. And you totally have my sympathies, Mark. The jewelry industry, and that's why we're having this webinar now, is certainly from the LBMA's point of view. Obviously, our members are banks. The investment market is what we've been focusing on. To quote an English author, it really is a tale of two cities. The demand in the investment world and the demand in the jewelry world is quite different. When the pandemic started, obviously it had a massive effect on the refineries, as Mark has already said. But what happened very, very quickly is people put business continuity plans in place. The vaults certainly had business continuity plans straight away, but also the logistics companies. Yes, they had to adapt because, as you know, most of the gold is traveling on passenger flights around the world. The passenger flights stopped, so the logistics companies had to find other alternative ways of moving the gold around, and that affected the ability for the doré to get to the refineries, but also the refined material to get from the refineries to the markets. But I'm very pleased to say that the logistics companies adapted very well, and they managed to get to a situation where, yes, it's probably a little pricier, and some of the shipments might have had to find novel ways of getting to places, but the logistics industry is, under the circumstances, is running very well. And because of that, the refineries effectively, there is a minimal effect on refining capacity at the moment. The doré is getting to the refineries and the gold is to the market. Now, what we saw also very early on is a couple of the Swiss refineries, certainly in the south of Switzerland, had issues because that was really where things started off. And yes, they did close down, but they're now back up and running. Obviously, a lot of the Swiss, their demand, but who is buying their products, you had to wait for the watchmaking industry to start up again. You had to wait for the jewelry industry to start up again for them to supply those markets. But the reality is the demand from the investment market is really keeping the refineries really running at what capacity they can run at. So the refineries not in a good place, but certainly operating as well as can be expected under the circumstances. So we're quite comfortable in the investment space, but yeah, the jewelry space is just something different. Hence the need for this webinar.
And how has it affected the conflict minerals legislation, Neil?
Yeah. So the LBMA's program, as was the other programs, we're going through a review by the European Union to make sure that the programs would meet the requirements of legislation that's coming into effect next year. So that process was well underway. We'd done the third-party people who were brought in to do that work. We had our meetings with them. We demonstrated our program, and we were in a good place. The next step in that process was for them to perform shadow audits, which meant that they would go and follow the auditors in the refineries and seeing what they were doing to make sure that the systems were robust enough to meet the EU conflict minerals requirements. Now, those haven't happened now. We're slowly getting back up and running and getting the audits done. So we are starting to see, especially from the Far East, those audits are happening. We are seeing the audit reports. But it's not necessarily the availability of the auditors, because a lot of the auditors are in country. It's the ability of the people appointed by the European Union to be able to shadow those audits. So what my understanding from the European Union is that They understand that. And what they will do is, unless there is any, let's call them red flags that have popped up during the initial process, our systems will not necessarily be recognized, but you'll still be able to carry on operating under their auspices until the time comes that they can finish that process.
Okay.
And as Iris said, you've had to come up with new solutions. You've had to come up with novel ways of tackling these problems, because let's make it quite clear, we're not going to drop standards. That's the last thing. This is not an opportunity to drop standards. We will maintain standards, but find better ways or alternative ways of doing things. And just one example of that is we're investigating the possibility of doing virtual audits, where you'll have somebody on the ground doing the work who's already in country, but have a virtual oversight of that audit process. Obviously, we would not do that in high risk circumstances, but in low risk circumstances, that is certainly a viable alternative.
Great, thank you, Neil. I mean, we can see the impact is significant and it's going to be longer term, and there's been significant impact and disruption. One of the other things we wanted to talk about in the little time we have left is going back to you again, Neil, probably is the increased desire through the industry to look at how to deal with artisanal sourcing and integrate artisanal sourcing into the mainstream gold supply chain. How do you believe the gold refining industry can look at sourcing more artisanal gold without the risk, as you said, of dropping standards? And what's the LBMA's position on accepting artisanal gold into the good delivery system?
Yeah, so I'll start with the statement to say that the LBMA supports any initiative that enables responsibly sourced ASM material to enter the legitimate supply chain. That's the fact. That's where we stand. There are an awful lot of people doing an awful lot of good work to make sure that ASM can be responsibly sourced. I think the last webinar I did here was with the Swiss Better Gold initiative, and that's fantastic, because you had a refinery like Metalor who initially said, we've been so beaten up over this, we're not going to do it because the risk reward ratio doesn't make sense. Now you've got them coming back and saying, we've now identified a program that will give us the comfort that we can take that material safely. It's always going to be high risk. There's always a risk of other stuff getting into that legitimate supply chain, but as long as those risks are minimized, and we can see that in the audit reports, that the refineries have made the effort here to try and do a good job. They've worked with NGOs, they've worked with government-backed systems. That's the way forward. And they've used things, for example, like the Craft Code, which says if you do this, there's a good chance you're doing a good job. Nobody's perfect, mistakes are going to get made. So the key message here is, if somebody's trying to do a good job, but something goes wrong, judge them on how they react to it going wrong, not the fact that it went wrong. And that's the key message, is we've all got to work together, that if something comes along, like COVID, which puts these supply chains at risk, how do we react to that to try and make sure that they can still happen?
Yeah. And Iris, is that the same with the Responsible Jewellery Council? How does the RJC look at ASM sourcing?
Well, we have the same, I would say, strong commitment and position as the LBMA. Of course, the RJC already works, with ASM standards such as the Fair Mines Standard with our Code of Practices, and also the Fair Trade Gold Standard with our Code of Practices, and COC Standard for Mine Material. And also the RJC allows members who source, for example, and you refer to it, Neil, from craft gold to make provenance claims regarding the material. And we also believe that's the only way forward. We do not want companies to step away. I think it's like Neil says, it's also about the OEC due diligence. It's steps of continuous improvement. And indeed, I think every organization we need to support to really support artisanal scale miners. I think it's a collective responsibility of the industry, and we fully support the call of action also from the NGOs on that. So yes, we have a very strong commitment to do that.
Great. Mark, Richline was one of the only companies that was able to supply artisanal gold from the Congo through an LBMA good delivery refinery about 18 months ago. What's Richline's view on ASM gold? Do you see more demand from consumers, and is it something you would like to get more involved in?
First of all, I echo, what Neil and Iris said about the standards. There are some good standards. The craft standard is quite good. I'm certainly a big fan of the Fair Mine standards and some of the others. But so that still comes first. It still is risk mitigation. What we learned from the 2-year process of our Congo project is that the pilot requires multiple things. It requires the land rights to be verified. It requires miners to be counted and certified and registered. It requires on-the-ground oversight for everything from human rights to conflict minerals, but it can be done. And we felt from our project that the win wasn't moving gold. The win was creating a template of which craft is very much a beneficiary. The craft standard of looking at the templates and looking at how we do verify responsible practices and mitigate risks. So with that said, first, our position is that we believe in fair mixed. And what I mean by fair mixed is that large manufacturers as us are mostly based upon a mass balance standard, where we're bringing gold in from many different mines and many different refineries and taking it from there. So we believe there's an absolute position for artisanal mining in that mix of our mass balance. We believe that supporting them helps them cure themselves where there are responsible needs within their chains, so that we'll never help solve the problem of risky mining operations unless we support them in a positive way and help them contribute towards new levels of responsibility. So we're quite a strong believer in finding ways to support the smaller mines.
Thank you, Mark. I think we've got a little bit of time for some questions. If we can be quite quick with the answers. The first one I have is for Iris, or maybe to Neil. Neil, sorry, let me just go. It's yes, Iris. Do you have examples of the types of innovative partnerships to be inspired by that you talked about at the beginning of the session?
Well, yes. Well, I think first of all, partnerships is throughout the supply chain. Is partnerships, for example, to organizations working together like the LBMA and the RJC on harmonization and standardization, and to help companies through the journey of integrating human rights, labor rights, environmental impact into their operations, because it's complex and it's often challenging. So I think the more we can help members on that journey, the more we will have confidence. And I think we're working already closely, but I think we can always accelerate. I think our partnership that, for example, the RJC has set with the UN Global Compact, again, on the SDGs and impact, we didn't touch the topic today, but everything is about environment, social, and governance frameworks for organizations, again, to protect their brand equity, to protect their operations. So I think, one, the RGC already works with many trade organizations and associations around the world. We will continue to do so. And I think finally, with one outcome, is about impacts. We work in an industry of beauty and emotions. So we need to show how our product throughout the supply chain touches the lives of people and contributes to development. And to know is to show. So I think a lot of work can be done on telling the story, and not only the positive stories, but also the challenges and the opportunities. So, and I would also invite you to go to our website, where you have a big overview of all the stakeholders we collaborate with, and always happy to take, of course, any question offline.
Thank you, Iris. Mark, we have a question about what you talked about earlier on, which is Do you think that consumer perceptions would be different from what you talked about earlier on if the poll were taken today after the increase of the virus in the USA since May?
There was the most recent one I saw, in fact, it was about 2 days ago, was from McKinsey. McKinsey and Bloomberg are both pretty good about putting out weekly or 10-day updates on consumer attitudes. That optimism seemed to extend, not as quickly as it did through the month of June, but that the consumer confidence did increase a little bit more. The point is well made that, and probably the polls trail some response, but there is great fear, obviously, for a second wave, and no one can say whether that's real, not real, controlled, uncontrolled. So the consumer attitude is going to go very much with their safety. We have changed to a world where self-interest is first and foremost health and wellness of them and themselves and their families. So attitudes will certainly track their feelings about that.
Thank you. One for Neil, might be our last one, which is how are gold importers and refineries and manufacturers adapting their business to meet the oncoming EU conflict minerals regulation?
How do they adapt?
Yes.
I think the whole point of this is that if you're following one of the existing programs, you should already be there.
Yes.
I think that's it's not a glib answer, but if you are following the RJC, LBMA, or even RMI, you're already meeting those requirements. The EU were part of the alignment assessment that the OECD did a couple of years ago, where our programs were first checked against the OECD guidance to make sure that we are following the 5 steps. So the EU were part of that. And they certainly didn't want to reinvent the wheel. So it was the same people involved in that assessment that are doing the work now. So we weren't expecting any red flags. We weren't expecting any serious deficiencies. So if you're already following one of our programs, you should already be there.
Thank you. I think that probably takes us to the end. We can see from our very brief discussion that the impact on consumer demand around the world in the jewellery market for gold is going to be very significant and is likely to be long-term. The supply chain's been disrupted, but things are slowly getting back to normal in some markets, particularly in refining. However, I think we've seen from our speakers that when things start to return to some level of normality, it's not going to be the same. Most of our speakers have spoken about a more discretionary consumer, more interest in provenance, and particularly in terms of compliance to international standards, such as those and the LBMA and the RJC. So I think that probably takes us up. I'll pass back now to Taylor at the LBMA, and thank you everybody for listening.
Thank you all.
Thank you.
Thank you all.
Yes, thank you all for your great insights today. I apologise to our attendees for running over, but we just had such great material to cover. And also, I'm sorry that we couldn't get to all the questions, but there were just so many. So we will follow up with you in due course. LBMA will be taking a break for the month of August for our webinars. But please join us for our final week of webinars before we break up for the summer. We have included an extra webinar on Tuesday, 28th July at 3 p.m. BST, where Manfred Metzinger-Leopold from the Austrian Mint will provide a scientific overview of types of security features. And as our last webinar before the break, on Thursday, 30th July, we are providing LBMA's Asia update from Jeremy East of LBMA and Sunil Kashyap of Scotiabank. You can also access our library of webinars anytime. So with that, again, I'd like to thank all of our panelists, Iris, Mark, Neil, Philip, and all of our attendees. It's been wonderful to have you on. So thank you.
Thank you very much. Bye-bye.
Thank you all.
Bye.